But looking at just inflation, for example, in Australia, its most recent reading, it was 6%. In the US, it's half that at 3%. So are there less pressures right now in the US economy compared to Australian economy?
Yeah, we are seeing that. The inflationary pressures in the United States have started to moderate. In Australia, it's still very high. But that does impact. I think there's other impacts, like, for example, the royalties in Queensland, that makes one look at the two jurisdictions of where we've chosen to grow our business within and decide where we would invest. We're very proud to be part of Queensland. We've got great resources within Queensland. But as we grow the business, we look at, well, where's the best to deploy our capital investment? And all of those measures come into our considerations.
Yeah, you mentioned the higher Queensland government coal royalties. Just how much more money have you been paying the Queensland government in this half year compared to previously?
We've contributed substantial amounts to not only the royalties, but also our taxations. We paid and you would see it in our cash flows, we paid just on 100 million in taxation in this half in taxes. And in those royalties, the pricing has come off, but has still impacted and been headwinds to our reported results in the quarter.
Yeah, looking at your reported results, a decline in revenue and net income for the half year. I mean, how much of that was simply coal prices coming back down?
Majority of that is driven by our coal prices. You know, last year we saw an exceptional environment that we benefited from, and this year the pricing has started to moderate. We're seeing that in this quarter, being monsoon season, some of the economic environment in which we're operating through quarter three, pricing is subdued, but we're seeing buoyancy in the back end of quarter three into quarter four as stimulus in China starts to take the impact that we're all expecting, but particularly in India, being the bright star after the monsoon season, we're going to see restocking and driving of their steel mills, and that'll give the confidence that pricing will return. But even in these subdued environments where steel production has been impacted and the economies have been impacted, we're still seeing good pricing that's well above the long-term average.
Yeah, looking at your costs, mining costs per tonne up about 14%, but it sounds like what you're telling me is those pressures are starting to now ease off.
They are. The inflationary pressures around the world, we're starting to find some kind of normality. As you said earlier, in the United States, it's now at 3%. We're seeing Australia should start easing back as well. The royalty rates have clearly contributed to those mining costs as well. And then we've also repositioned our business. We're definitely a business that cuts the suit to fit the cloth. So we've addressed our operations, but the denominator in volume is clearly the biggest driver, and that's what we've been pushing through this quarter, and quarter two is a testament to that. We've delivered some fantastic results across all of our operating segments.
Yeah, you acquired Vikara Coal mine in Queensland in 2018. Just how significant an asset has that become for Coronado over the past 5 years?
Oh, it's a great asset. It not only offers the two very large open cuts that we presently have on the mine, but it's a long life, very high quality met coal asset with resources that are offering opportunities like the underground mine that we've recently announced that we'll be building at Curragh North. That'll offer us diversification not only in mining methods, so we'll have the two open cut mines, but we'll also have an underground mine providing supply into our two coal processing plants that we have on the asset as well. So it's a very significant part of our business and will be for a long time to come.
You also signed a new 4-year enterprise agreement with workers at Curragh. Just how difficult were those negotiations? Because workplace relations has obviously been a big story for the past couple of years in Australia.
We had vigorous negotiations, but I'm very pleased to say that we came to a good outcome for all. There's security for all involved. We've got a 4-year agreement. It's on good terms for both sides, and it reflects the value in both. We've got great people with really good skills. This gives them the security. It also offers a value proposition that we're seeing, attracting really good people that are joining our business and wanting to be part of our story going forward.
And then just looking at the outlook, you mentioned India as a growing customer base for you, but where do you see coal prices and coal demand heading over the next few years?
All of our analysis and supported by external analysts shows that the base price is now going to be well above the long-term average. Interestingly, in the last while, we've seen the suppressed market in steel demand We've still seen reasonably good pricing in the thermal coal, in the met coal environment. Thermal coal has gone the other way. So I think met coal has found its new base for long-term pricing averages, and we're seeing in the near term that pricing will start to uptick in the back end of Q3 and into Q4.
Well, Douglas Thompson, Chief Executive at Coronado, thanks for your time today.